Welcome to the February 2nd, 2026 advance report for McGowanGroup clients. Wow, Dallas real estate. I've got an update most people are not aware of on the price of your home here in North Texas. Case-Shiller came out this week and this surprised me. Now, the chart goes from 299 to 291. Essentially, we've got a 3% decrease, and this surprised me. June 30th was the peak over the past year, and we went from 299 to 291. That means the average home is down 3%. There are different pockets, of course, across the Dallas area, but in this case, part of it is the ability to create new supply because we've got a huge inflow of population. It's not a 2007 run for the hills in real estate, where this index was actually down 30% by 2010. When I showed that to the realtors, I think they really didn't like the news, but they said I was right. Invited me back a year later after they got over it, but because it was true. Now, nationally, you've seen a settling down. It's about a 1% decrease over the past year. Dallas is actually a 1.5% decrease, but 3% from its recent peak. All right, this week's action. The Dow Jones Industrial Average now up 1.75% for the year. And what is trouncing that? Well, it's not tech. Actually, the NASDAQ is now up less than 2% for the year. That's still a very healthy annualized rate of return. It'd be double digits. So it's actually good news for the month of January. But we have to say what is working better, and it has to do with energy. So I am going to get to energy. Let's work through the charts here. By the way, I'm Spencer McGowan, your financial weatherman and President, McGowanGroup Wealth Management, a team of 10, the team that cares, highly skilled professionals devoted to your success, the team that you want on your side. You can contact us at networthradio.com to upgrade your plan. What is this? Earnings. It is earnings season. We've got about a third of the S&P 500 companies reporting earnings. How's it going? A 15% increase over last year. That double-digit increase, we predicted it right here, which is probably why you want to subscribe. We were using these forward pockets of estimates, and this says, wow, you've got somewhere around 14 or 15% projected going forward. Revenue for the companies reporting so far, up 7% over last year. That's a heck of a lot more than inflation, and it signals that the economy is still doing great. There is a prediction for what's going to happen April and May, so stay tuned. I'll get to that. The big action this week, though, coulda, woulda, shoulda bought gold and silver. This is the dollar index. It's down 11% over the past year, and that makes big headlines. Nobody likes us anymore. The dollar is falling, and it's not going to be worth anything. So what did people do? And then I'm going to give you a historical context on this that you won't forget. Here we go. Whoa, gold, $55.95 per troy ounce for the first time in history. The gold bugs are celebrating. Looks like a short squeeze, settled back to about 5,000 at the end of the week. And silver, not to be outdone, $121 per troy ounce for the first time in history, settled down to about 99 at the end of the week. And that's still nearly a triple over the past year. So gold and silver. It wasn't crypto, by the way. Bitcoin is down 20% over the past year. So the alternate dollar thesis of crypto has just been decimated. Binance is the only one that's up because the Binance founder got pardoned by Trump for whatever reason. But Binance is up over the past year. But you take the top 10 cryptos other than Binance, the average decline over 50% in the past year. It is an absolute bloodbath in crypto. So this anti-dollar trade, it's just blown apart at this point. So beware of what happens from here. This is the dollar index all the way back to the 70s. Now, this index was created at 100. I guess they just put the numbers together. This is versus all other currencies trade weighted. And you can see it went up to about 120, all the way down to 80. Here, we got to 70. And that was back before the crisis of 2008. I'm not sure what was going on, but that's a dollar decimation going from 120 to 70. I went to Italy at that point, and man, when I got the credit card bills, it was horrible. I didn't want to go back. Anyway, this is a better time to go to Italy. That was in the 80s. And here we see the 120. That was a good time to travel to Europe. But here, 96.7, what's the thesis here? Is the dollar long-term declining? Yes, there's the inflation rate, which averages, by the way, about 3% over any long time period since the Fed was founded in 1913. But it's not a depreciation longer term. This is not a crisis level. 80 would be, so we'll keep watching it, and 70 would be. But what happens in the U.S.? U.S. companies gain export advantage over their competitors overseas because we are cheaper in many aspects, about 11% cheaper over the past year. So it's not necessarily a negative. As a matter of fact, the multinational companies make a lot less money and actually record some charges when the dollar gets to 110 or 115. Now, I've got a preview for April and May. What happens in April and May? The energy companies will report earnings for the first quarter. What just happened? It was a deep freeze, and they're going to freeze again in the Northeast. What does that increase? It increases the use of natural gas, which still supplies the lion's share of electricity. We went all the way to $7.82 and then right back to here because the pipeline companies have right-sized production and they're able to satisfy demand. But it also means what happened over this time period. You actually got lots of flow through the pipelines. How much extra? It's projected that you could see a 60% increase in the flow through the pipelines. You got data centers, you got liquid natural gas exportations, and you just had a big winter storm. Well, that has to flow through the pipeline, and it's like a tollway. Well, that's where your dividend comes from, and that's why energy infrastructure is a part of the managed portfolios here at McGowanGroup Wealth Management. It's not without price risk. The pipelines went down by 2/3 in 2020, where we added to them, even though it was a miserable experience during the shutdown. Now, crude oil. This surprised me. We've been hearing about drill, baby, drill, plenty of supply, oversupply. Boom. Crude hit 65.62 per barrel this week. That is a healthy increase over last year, and it begins to change the dynamics for the energy infrastructure companies. ExxonMobil, 15% year-to-date gain. Wow, that's huge. And you take the energy infrastructure, the S&P Oil and Gas Index, it's up 13% for the year, way outperforming the tech stocks so far in 2026. Thank you for tuning in. Find us at networthradio.com. You can meet the team there, and we look forward to upgrading your plan for 2026. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You could see our performance track record.